Hello and welcome to our video on trading with minimum risk. Trading can be a great way to make money, but it can also be risky. Many traders have lost everything because they didn't understand how to manage their risk. In this video, we will explain you how to trade with minimum risk so you can make consistent profits without exposing yourself to unnecessary risks. We will be covering topics such as risk management, trading strategies, and portfolio management. We will be sharing some tips and techniques that you can use right away to start trading with minimum risk. So whether you're a beginner or an experienced trader, this video is for you. So stay tuned, and let's start learning how to trade with minimum risk.
Trading with a minimum risk is an important part of any successful trading strategy. Here are some tips for trading with a minimum risk. Develop a trading plan. A trading plan should include details about entry and exit points, position size, money management, and risk management. Set realistic expectations. Understand that trading can be volatile, and there is no guarantee of success. Use technology to your advantage. Utilize the latest trading platforms and tools to help make informed decisions. Protect your trading capital. Make sure you have enough money in your trading account to cover any losses. Become a student of the markets. Spend time researching and understanding the markets and their nuances. Risk only what you can afford to lose. Make sure that all of the money in your trading account is expendable. Develop a methodology based on facts. Don't rely on get-rich-quick schemes or emotional decisions. Always use a stop loss. A stop loss is a predetermined amount of risk that a trader is willing to accept with each trade. Know when to stop trading. If your trading plan is ineffective or you're not in a good mental state to trade, take a break. By following these tips, you can trade with a minimum risk and increase your chances of success. When trading with a minimum risk, it is important to develop a trading plan that details your entry and exit points, position size, money management, and risk management. You should also set realistic expectations for your trading activities and understand that there is no guarantee of success. To help make informed decisions, utilize the latest trading platforms and tools. Additionally, make sure you have enough money in your trading account to cover any potential losses and become a student of the markets by researching and understanding their nuances. It is important to risk only what you can afford to lose and develop a methodology based on facts, not get-rich-quick schemes or emotional decisions. Finally, always use a stop loss and know when to stop trading if your trading plan is ineffective or you're not in a good mental state to trade. By following these tips, you can increase your chances of success while trading with a minimum risk. That was our first lesson. Don't forget to subscribe, like, and hit the notifications bell.